Let's start with the gold prices, and they have retreated for a second straight day, dropping back from one-month highs as strong U.S. retail sales and global economic growth prospects have prompted a rally in stock markets and dented the metal's appeal as safe haven. The metal surged after a disappointing jobs report last week, stoking in speculation that the U.S. Fed could slow the pace of its stimulus tapering. The Brent crude prices in the meanwhile have dropped as well to 106 a barrel as the prospect of a rise in Iranian oil exports weighs on the sentiment. While investors look ahead to the weekly oil inventories from the US, that is what will tell you where the supplies are, and that would impact the prices as well. Let's take it to the experts then, and Priyank Upadhyay, AVP Commodity Research, SSJ Finance and Securities, now joins us. Also joining us in the studios is Vijay Bhamwani, who's author and CEO at BSPL India. Vijay, hi, let's start with you first. And what's your sense now really on the gold and silver prices? Because while we saw a couple of first weeks of 2014 start on a strong note, now it's more about consolidation, profit taking?
Absolutely, Manisha, and it's along expected lines. As we've been discussing on the show, the upsides are running into resistance. Unless you see prices of gold trading sustainably above 29,450 odd levels, I don't see the bulls coming in with strength and lending support at lower levels. Ditto with silver, 45,600 seems to be the glass ceiling, which the bulls will have to overcome and overcome sustainably on a few consecutive closing sessions basis, failing which the upsides are likely to run into resistance. There will be profit sales and even short sells, and prices are likely to seek equilibrium at lower levels. So I would not really feel comfortable buying gold or silver at current prices.
Also, Vijay, how would you look at the silver prices? Because you have been saying that this is a metal that perhaps might see a rebound faster than gold when it comes to that. Would you stick on to that kind of a forecast, and what kind of levels are you working with now?
I would stick to that view that silver is likely to be a relative outperformer vis-a-vis gold. But at 44,600 odd levels, I'm a little wary of buying. I would still stick to my older levels of 42,000, 42,500 levels, where I would prefer to advise buying in physical delivery space rather than leverage space, because the cost of carry does tend to be unusually high in the Indian context. So I would wait for a 2,000 to 2,500 rupee decline and then take a call rather than chase prices at these high levels.
All right, let's get Priyank in the conversation as well. Priyank, what's your sense? On the medium term, it still is perhaps sell-on rallies, but with the kind of decline that we have seen today because of rupee depreciation, or rather rupee appreciation as well, how would you look at the current levels, and do you see an opportunity to buy?
See, overall, the rally what we have seen in international gold prices is running into a resistance around 1250, and again on the lower side, if we talk about supports will come around 1220 to 1210 zones. Overall, a band of 1210 to 1250 would be the range going forward in the short term at least. Coming to domestic markets, 28,800, 28,600 would be the downside support range, and on the higher side, 29,200 to 29,300 would act as a strong resistance. So overall, this range would be in play for next few sessions. But given a bias from the intraday perspective, if we see a correction in prices, what we have seen, and perhaps from the current levels are around 100, 150 rupee correction, around 28,800, 28,700, I'll take a chance for going on the buy side with a stop loss below 28,600, and we can again expect a pullback rally towards 29,000 to 29,100.
Priyank, how would you look at the energy space now? Because on one side there is the Iran issue, on the other side, of course, we are awaiting the US weekly inventory numbers, and that would really give you a direction for the very near term. But having said that, at these $92 odd kind of levels, how would you want to trade?
See, Manisha, crude oil, if we see, is continuously on the southward journey, and looks like from the oversold conditions, we are seeing a pullback rally. I feel this pullback rally could continue towards 5750 to 5780 zones. So from overall, the trend still remains on the medium term. Trend still remains on the downside, but on the short term play, if we look at from the intraday perspective, I feel there could be a rally towards 5750 to 5770 in the short term. So any correction towards the 5700, 5680 zones would be levels to go long, with a stop loss placed below 5640, and we can expect targets of around 5750 to 5770.
Vijay, how would you look at the natural gas prices? Would you say that we are finally looking at some kind of supports here, because it's trading at a 2-week highs yet again in the international markets on back of those cold forecasts coming in yet again?
Manisha, we talked about the 252 to 254 levels as being a tradable a bounce kind of a level from where bulls would derive support, and sure enough, you've seen a price of almost 18 rupees in appreciation in the last couple of trading sessions. Much of it is also got to do with the fact that the prompt month futures are now headed into expiry, and very soon you'll see what is typical of the empirical evidence that we have. The bears tend to square up their short positions and then initiate fresh shorts into the next month futures rather than roll their shorts over on the same day. So I would not really be surprised to see natural gas prices attempt, I'm using the word attempt here rather than a higher probability, they might just attempt to scale the 278 odd levels, and possibly even higher if the short covering is a lot more proactive. But the risk-reward ratio does not warranty a buy at this point in time. On the other hand, if I see 278 plus levels, I might just initiate some small-sized short sales with a stop at 285 to 288 levels.
Let's take a look at the base metal prices as well. It has started as a weaker day. We saw profit taking starting in the Asian markets itself, and nothing really has improved as we have moved into other time zones. Priyank, how would you look at a nickel? Because after that Indonesia export ban information came, we did see a jump up in prices. There were various international reports perhaps forecasting a 20% gain up in 2014. Would you stick to that?
The Indonesia ban up have already priced in. We have seen a strong rally from 830 onwards to 890 zones. Now prices could consolidate a bit. There would not be a spike up rally again. We could see a bit of selling pressure or a profit taking on the higher levels. So on the dips around, if we talk about the intraday perspective, short term perspective, 875 would act as a strong support. So buying would be advisable around 875, 870 zones with a stop loss below 865, and again we can expect targets of around 890 to 893.
Vijay, how would you look at something like copper? Because on one side the positive data does mean that you might see gains coming in for prices, but on the other side the supplies are expected to be in surplus in 2014 as well. Which side do you see stronger?
Manish, in the absolute near term, the worries on Chinese offtake will weigh on prices. And I would not really be surprised to see copper go below the 435 to 438 kind of a band. It touches that support level or maybe even violate it with a small margin. Thereafter, you could see some stability after the first quarter of the calendar year is over and we have greater clarity on what's happening in the US economy and, of course, in the Eurozone. I think the first quarter is likely to be a fairly forgettable one for die-hard copper bulls unless some fresh data points emerge. So I would like to buy deep declines rather than feel comfortable buying at 455 odd levels.
Jean-Yui Chow, Associate Director, Trade Commodity Finance, joins us on the show now with his take on all of that agro space there. Jean, hi, welcome to the show. Most of the agro commodities are looking at an extended surplus situation from 2013 to 2014. Which commodities do you see in enough supplies in this year as well?
Well, overall, yes. Rather see the commodity in agri to be rebuilding. This is mainly the case for corn, soybean, and especially for a lot of these commodities. What's happening is we have a continuity of rebuilding from last year's. So overall, the key commodities are going down. So if you take one by one, corn is definitely rebuilt by the US supply. So that will be adding stocks, or we're talking about 45 millions of tons to be carryovers from US. For soybean, it's definitely the South America key drivers. We're expecting 149 millions overall bringing to the stocks. And the last one is adding from from this commodity, which is also adding a surplus.
Fair point. What's your sense on sugar, which is in supply surplus for a fourth year in 2014? What's your sense on demand and prices in the international markets as well?
Yeah, I agree that 2014 we still see a surplus in sugar, but definitely the surplus is narrowing down. We're coming to a rebalancing in terms of stocks. The demand is still increasing slightly, but the key situations to rebalancing the surplus is the supply, a bit more discipline on the supply. So price, we have a little opportunity to upside. So today we're circa 17 cents per pound, but we expect the second half year to be 18 cents per pound.
Would also want your opinion on the wheat, where India is headed for a record crop of 100 million tons in this year. What's your reading on the global supplies and prices for this one?
Yes, we expect 100 million tons of wheat from India, which is a great improvement. So what's going on with this excess surplus in productions? The government is start putting incentives for export to release some space for the coming harvest in April. So that will give extra flow to the market, and that will push down the price.
Sean, you mentioned about corn, and we are looking at a heavy supply on that one, as you mentioned. What's your outlook on soybean then in 2014? How would you really look at a couple of these crops?
I think soybean will be definitely the major losers. We expect probably a decline from price from almost 80%. From now, about $13 to moving to 10.7. This is mainly from US and mainly from the US, but also most importantly from South America. We expect the supply of South America, which is coming to export in Q2, to really start pushing down the price.
Okay, final question to you then. What would you say that owing to higher supplies, there is a chance of prices going down this year, and thus that would impact sowing next year as the remuneration from these crops goes down?
Yes, definitely overall the agri-supply surplus in a lot of these major commodities will definitely put the dry price moving down. So we are in the downward things. We're far from the agflations that we seen 2 years ago. But if you look at the farmers, I don't think they will stop planting. There are a lot of investment being done on the exporting countries. It's a cycle that we know in the soft commodity in Rabobank. So what we see, there will probably be a bit less investment on land this year, more cautious on the development, but overall we see a growing trade of import-export on the soft commodities.
Fair point, John. We'll let you go at that. Thank you so much for joining us. So that's the view really coming in from Trade Commodity Finance on the agro sector there. But Vijay, what's your sense? Because while we are talking about higher supplies in 2014 and while we have seen the spot prices come down as well, would you say it's sustainable, or going forward you think the prices have a possibility of rebounding and strong?
Manisha, where the first quarter of the calendar year is concerned, I think a top has been made in wheat. I think we are very close to a bottom in sugar. Recovery, of course, in sugar will come after April. Ditto with chana, where I think we are at the lower end of the spectrum, give or take 150, 170 rupees odd of a possible decline, if at all. So after April, I think prices of agri-commodities are likely to see a recovery, a gradual one at best. Wheat might be a laggard because of the huge amount of stocks that we have, and provided export picks up very, very proactively, we might just see further declines in wheat even in the second calendar quarter. But sugar and pulses, I think, will start to show recovery after April.
Vijay, you also mentioned about potato in the break, that how it was trading on an upper circuit yet again today. What's your sense on that? Where do you see the resistance coming in for this one?
Manisha, the April month futures, which is the second month future and trading at a discount to the March month future, which is the prompt month series here, is likely to go past the 1,000 mark, and that is a view I'm consistent in advocating. I think declines of 2.5% would be invitation for the bulls to buy, provided you're willing to fund that position in terms of either buying at lower levels if at all there is a further decline, or sticking to your existing positions and paying mark-to-market margins wherever applicable. I think you're likely to see 1,020 plus levels in the April month futures.